Hi, I'm Anita Monrroy, tu contadora, your accountant, your guide to creating, managing, growing your small business and bottom line. Today we are talking about how to organize your small business finances from day one. The first step that I recommend my clients do is open a business bank account so that they can separate their personal transactions from their business transactions. The reason why it's important to have a business bank account that is separate from your personal bank account is because this way you can go ahead and track your income and expenses in an easier, more streamlined way. First of all, what can happen if you do not separate your business and personal transactions when it comes to you preparing your tax return or go and get your tax return prepared, it becomes a headache because there you are faced with time has progressed. You've probably anywhere from 6 months to a year have gone by, and now you're trying to go back and dig for these transactions. I mean, at best, some of my clients, what they do is they print out their bank statements and get a highlighter and start highlighting line by line if they can even remember. Some of my clients can't remember what has transpired in the last month, yet alone the last 6 months or the last 12 months. And so then it becomes really, really challenging for the small business owner to piece together all of the transactions that have happened throughout the year. Any size business, either you are starting and you only have a few transactions to having hundreds and hundreds of transactions, that is like the first thing that any business should do. And this actually ends up becoming a very important tool because as self-employed people in the future, if you do not already own a home and you want to buy a home in the future, you're going to have to substantiate your business income. And the only way that you're going to be able to show or prove or do an income verification is by having a separate bank account, because a personal bank account commingled with a business bank account is not viewed in the business sector as a bona fide business. So the things that you need to open a business bank account today is, first, you need to have a fictitious business name, also known as a DBA. If you are doing business as a name that is not your legal name. So like my name is Anita Monrroy, and I am doing business as Mis Centavos. So as Mis Centavos, since I'm doing business as Mis Centavos and not my name, Anita Monrroy, I need to have a fictitious business statement, which usually you can file with the local county recorder's office. And so what you would do is you would fill out the form. You would pay here in Los Angeles, you pay $10 for that statement. And you would file that form. And then once it has been recorded, county recorder's office will mail you a stamped copy of that fictitious business name statement. The next step is going onto the irs.gov website and filling out an SS4. That SS4 is for you to acquire an employee identification number, an EIN, which is similar to a social security number. As a personal, as an individual, you have your own social security number. So the business would be applying for a quote unquote their own social security number, which is also a 9-digit number, but it is called an EIN. Once you go to the irs.gov website, that process takes anywhere from 15 to 20 minutes to apply online. You follow the prompts online. And then at the end, when you submit the form, the IRS website will issue you an EIN. As long as you fill out the paperwork correctly online, you will get that EIN at the end of the submission. So it will take a few minutes for them to process the application, and then it will go ahead and give you the EIN and use that number to go to the bank and open the bank account. The EIN is very important for you to have, not only for you to open this business bank account. It's also a way for you to protect your identity when you are working as a sole proprietor or an independent contractor, or also known as you're self-employed. There are times that your customers might ask you to fill out a Form W-9. When you fill out a Form W-9, if you do not have an EIN number, you would list your Social Security number. Now, because of identity theft being such a huge risk, having an EIN would protect your identity, because you wouldn't be just sending out these forms with your Social Security number. So once you have your DBA, your fictitious business statement, already recorded with the recorder's office, that means that you have that blue seal, and you also have your EIN, then you can go to the bank and apply for a business bank account, or you could also apply for it online. Either way, you will need those items to apply for it and successfully open that business bank account. So once you have opened the business bank account, you start running all of your transactions through that bank account. So customers will pay you, and if you're using third-party processors like PayPal, Venmo, Stripe, you would set up all of those accounts linked to your business bank account. Once you have linked them, all the transactions, all the deposits will be going directly into that business bank account. The same thing would be with your expenses. Now you're going to have a debit card that is linked to that business bank account. For people that actually write checks, you will also have a checkbook. You'll be able to track a variety of type of transactions, like making tax payments, paying the suppliers, depositing, like I said, payments from your customers, from any of the third-party processors, paying operational expenses, making necessary business purchases, like if you're buying, computers or any type of equipment. And for the people that want to establish business credit, now you can establish business credit because, again, you have a business bank account and you have the EIN and you have the DBA. So now you have all the paperwork to seem like a bona fide business. By having all these transactions tracked in this way, it's easier for you to apply for lines of credit, to get grants with the city and local government, even the state or federal government. This is something that happened during the pandemic. A lot of the clients that had not established or formalized their business in the manner that I just explained, were not able to get the PPP loans. They were not able to get the EIDL loans because they didn't have the necessary paperwork to be able to get that assistance, which was very, very disheartening because a lot of these small business owners really could have taken advantage of this funding and the grants and all of this money that was available to them, yet they didn't have the paperwork. And so having this paperwork is vital. These are like the bare essentials of what a small business needs to be organized. Once you have the business bank account and all of these, and you have formalized your business, then the next step would be to establish a way to track your business transactions, either through like an Excel spreadsheet or an accounting software online. Many business owners start out with QuickBooks Self-Employed, or there's like QuickBooks Simple Start. Some other clients use other softwares like Xero. Yet if you are still in the startup stage and not making a lot of money, and you want to start tracking these expenses and income and don't feel like you have enough transactions that merits you buying QuickBooks Online, one of the things that you can do is you can track your income and expenses through a Google Sheet or an Excel spreadsheet. The reason it's important for you to further organize your income and expenses, it's because at the end of the year, you want to be able to generate some accounting reports that help you and assist you in preparing your tax return. It's also a good way for you to see or check the how healthy your business is. Those accounting reports are a profit and loss statement, a balance sheet, and a cash flow statement. A profit and loss statement is a statement that shows the ins and outs of your business, all the income that comes in and all the expenses that go out. At the end of the year, when you run a profit and loss statement, you have total income minus total expenses equals your net income, or also known like your net profit. The balance sheet is like a snapshot or a picture of what your company is worth. So the balance sheet shows your assets, your liabilities, and your equity in the business. So the assets are your checking account, any cash that you have on hand, any equipment, all of those are assets. The summation of all of those, your accounts receivable, if people owe you money, that would also be an asset to your business. The total liabilities are people you owe money. So if you've taken out a business loan, then that would be in the liability section of your balance sheet. Any accounts payable, meaning that within the next 30 days, you owe some vendors. The liabilities is basically the total amount of money that the business owes. The equity section is how much the business is worth. So normally formula is total assets plus total liabilities equals the equity. The equity portion shows your initial investment into the company and what, at the end of the day, what it's worth. The next statement is cash flow statement, which is usually not a statement that people really talk about because it's a little more difficult to prepare. And the cash flow statement is really important for a small business owner because this is how you take the temperature of the business. How healthy is this business? Because what happens is that most business owners, when they, like, let's say, for instance, if they're using QuickBooks, they're running all of their business income and business transactions, and they look at the profit and loss statement and they're like, oh, I'm making money. And it shows that they're making money. But at the end of the day, they're like, I have no money in the bank though. I don't understand why I have no money in the bank. And the reason is because what the profit you're making on that is shown on a profit and loss statement is not necessarily what's happening from a cash perspective. Like in the cash flow, we're going to go ahead and that statement is going to show you all the cash coming in and all the cash going out. And so the net effect of that will tell you if you have positive cash flow or negative cash flow. When a company does not understand the cash flow statement, they have trouble meeting their obligations because the cash flow tends to be negative. The cash flow is going to show you how much cash you're actually retaining within the business. I know that I have just downloaded a lot of information in regards to these three statements, and I want to start the conversation about these three statements. It's not something that you will learn overnight or you will learn over this podcast, at least not this first one. I will be here to guide you through every single line of these statements. I will explain to you what each account in these statements means and how it impacts your business, how making decisions will impact your business. So I will be here step by step. We'll go through it. We'll digest it in little bite sizes. We will go through it together. All right. Find me on Facebook or on Instagram at Mis Centavos or miscentavos.com. I'm Anita Monrroy, tu contadora, your accountant, your guide to creating, managing, growing your small business and bottom line.